That's good.
Appointment
What's going on, y'all?
Okay, good. So I'm going to start with appointment setting, locking in the appointments, decision making, the husband, the doorbell, in-home sales, reported appointed trust, and showing you maybe a strategy you can use inside the house that's kind of new that I just came up with off the top of my head. I want to see if you can use it. Maybe if not, just keep doing what you're doing because it's working. So just the appointment setting part, I'm going to separate all that stuff and go over that. Obviously, if you can't get in the house, then you can't make any sales. So I think the number one thing that we got to do in the appointment setting portion of it is make sure that we're acknowledging that they understand what the call's about. So when you say you're only doing final expense right now, so you're doing a follow-up call to the call that they received yesterday, and if it's an older lead, you're just doing a follow-up call to a call that they had received a few days ago about final expense. So make sure that they understand what that call's about before you get into it. Number two, you want to make sure that they understand what the call's about. On top of that, we're going to make sure that they acknowledge that they do understand. Do you remember that? I'm doing a follow-up call to the call that you received yesterday about that final expense information, and ask them, do you remember that? Do you remember?
And the next thing they say is that the person was pushy and forced me into this appointment.
Oh, yeah. Okay. Well, if you get that, could run into that too. And that's the law of large numbers and using the people that you really, truly need to see anyway. So that's where lead flow comes in to get around that. But that kind of objection is simply bullshit anyway, 9 times out of 10. I listen to all my, I don't listen to them all. I used to. But I haven't seen any. I think that the point would be that is if you're getting to it late, then there could be that objection. If you're using the wrong lead resources, then that's definitely going to be an objection. So if that happens often, you need to switch up the guys that you're using, the lead vendors. So if you're getting that a lot, let's switch up the lead vendor and see if somebody else has something better for you. Did you hear what Jerome said, Alyssa? You know, what they say, that the guy was pushy and pushed him into the whole situation to buy it. You know, the lead resource.
It's not a qualified lead then. Does he listen to the recording?
So I would listen to the recording, Jerome, and make sure that you have them qualified. If they say that to you, take a note down, mark it down, and then get back into that recording and listen to what they said. 9 times out of 10, I'm telling you that they're lying to you.
Who's he using? Final expense.
Who are you using for that? Who's your final expense company?
What's my what?
Who's your final expense lead source?
Rusty.
Rusty.
I was using a new one that Patrick had. That was the $40 presets.
I'm happy with those.
But those didn't work out too well. So I'm laying off on those.
They don't work for anybody, so don't use those anymore.
A couple, may I say something?
Yeah.
Hi, Jerome. Hi, Jerome.
Hi.
A couple people will, you know, in a batch of 20, how many did you order, 20?
I bought 10, the minimum. You said you bought 20.
Oh, I thought it was a $20 minimum with Rusty.
Oh, with Rusty?
Yeah, with Rusty, 20?
Whatever the minimum is what I usually get. So.
Okay, you might find 1 or 2 that are duds. That's just
has
normal.
a telephone call on it too. So if you can't be on a webinar, at least call in.
You might find 1 or 2 that are like that, Jerome. But I definitely would listen to the recording because people will lie and say, oh, they called me at a bad time. I told them I didn't want it. So go back and listen to the recording. And I've actually caught people say that to me, and I'll have my recording up and I'll say, Well, that's funny because that's not what you told the man, and boom, I'll play the recording for them.
Okay, so you do tell them that they were recorded.
Yeah.
I didn't know what to do there.
So, Mrs. Jones, that's funny. You know, I figured she doesn't want it anyway, so I'm going to be combative. So I'm like, Mrs. Jones, that's funny. I'm going to pull up your conversation. Is this you? And I pull it up, and, you know, she'll say, sure, I'm interested in coverage, 20,000 or whatever. And she'll be like, oh, yeah, I guess that was me. Then they're just dumbfounded because they don't know what to say to you.
Yeah, the ones with Rusty I've been pretty happy with. That's actually where I've been getting most of my activity.
Okay.
Yeah, the $40 one's shame. I wish you would have asked me. We did not have luck. We had another agent that ran them. He did not have any luck. But then we have an agent in Ohio that strictly uses those and has sold $1.2 million in annuities off those leads. But like Jason said, how many did he purchase in order to sell those annuities? We didn't ask him that.
Just keep your lead flow coming in strong. I'm not saying that those leads won't work. I'm saying that you better have a big old bank account to get those leads to work at $40 a pop. And that's just pure, all of that is, Jerome, is just laziness. So it's just an hour or two more for you to save money, get more resources, and make more money. So don't have somebody dialing your leads until you're ready, you know?
He has an appointment center.
Well, if you have your own appointment center,
that's
different.
That's where I came. That's the conclusion I came to after the $40 ones didn't pan out.
So making sure that they remember that telephone call was made. So ask them, do you remember? Whatever objection you get, go past it and just get to the appointment. Oh, well, you know what? I'm sorry to hear that, but I have you down as, you know, I have a recording of it. I promise you, your favorite color is purple. You said your favorite color was purple. There's an acknowledgement to this. That's why they put the favorite color in there, so they remember the telephone call, and they may just forget. So just remind them. Can't happen on every lead because the business would be out of business. So I'm just going to take it off these new resources you have, and hopefully they're good enough for you to make some money on. So the third part of this is do you want to call? Hi, I'm doing a follow-up call to the call you received yesterday about that final expense information. I'm the rep that handles the area, so acknowledge the fact that you are the rep. Number 4, I'll be in the area, and then it's about the time. I'll be in the area tomorrow at 2 p.m. Does that work for you? I'll be in the area tomorrow at 3 p.m. No, that doesn't work. Okay. What days do work for you? Or you call out a few days and times for them. I like calling out the days and times. I don't like to sit on the phone and wait for somebody to guess what time they're good for. I just try to poke it in at them. Okay, how about tomorrow at 8 p.m.? How about the next day following that at 4 p.m.? That way the time moves a little faster, so you get more dials in them. All right, so with that being said, that's about it for the dials. I mean, it's really that simple. Hi, I'm doing a follow-up call to the call that you received yesterday pertaining to that final expense information. I'm the rep that handles your area. I'll be in your area tomorrow at 3 p.m. Can you and Mr. Jones be there and make sure that the significant other's there or somebody that helps them make important decisions? From now on, you do not go when there's just one person there, unless it's the last resort. If you have gone through and asked if there's somebody that helps them make important decisions and the significant other, and they say no to those two, your last resort is the beneficiary. So if you were to get this in place, who's your beneficiary? Who would be your beneficiary? And okay, would you like them there? So you don't want to go to some old person's house and then they have their child making a decision. You just wasted all your time and money and gas and things like that. So with that, let's move on to the sale in the house. There's another way to sell life insurance, and that's by splitting, informing people about the difference between term and whole life. So if you can show them the difference between term and whole life, there's a sale between one of these two. Whole life builds cash value. Term does not. Over the years, you can show them the investment. So whatever the product is, here's a number. Like if you have a number on the table, you know that if you're choosing $25,000, 50,000, and 100,000, show them the difference between those numbers between term and whole life. And you can do that with final expense. Most of the time, a lot of these people are going to choose. I just want you making sales for this. So that's why I'm going to show you this, because these people, if they're younger, they're probably going to choose the term because it's less expensive. But I want you to inform them about the cash value loss so they understand that. So if you put a 20-year term together for them, and this is obviously whole life, so it lasts their whole life. So they have a big decision to make between the two. Okay, I can get you a term product for 20 years and it'll be a lot cheaper, but it's obviously going to term out. It comes with zero cash value. Or I can show you this other product that lasts the rest of your life and comes with cash value just in case you ever need a loan from it. So it's going to be more money because it comes with cash value. But sometimes this is the best way to go. And you only have to do underwriting one time in your life. With this product, you have to do underwriting twice because eventually you're going to need it again. So they're going to be judging you on your age and health at the time that this is renewed. So depending on the age that they are, if they're 40 years old and to be 60 years of age, I mean, obviously the numbers are going to increase when they could have taken care of it with whole life right up front. So basically saying that you have an option to sell under this format, but using the term to get the cheaper rates if they qualify too. Sometimes they don't qualify and you have to use final expense anyway, because the underwriting on term is similar to index products. It's really, they really are sticklers about it. And a lot of people think that term is an easy product to get, but it's not. It very much so has a lot of underwriting to it. So I think that using this strategy will open the doors up to more sales for you, Jerome. And the reason I'm doing this for you is to kind of give people an option between the two. Sometimes you can read people and you can tell what the hell they want pretty quickly. You can tell, oh, this person just wants a final expense arrangement put together. I know that they want $10,000 and you can just put it under the final expense arrangement. This term stuff here, though, can really shine some big numbers. And whenever the only problem with that is that somebody can come in there and rearrange that for a whole life index product and usually get the same price for an index product, which is only about 10 or 20 bucks more to get an index product, not a whole life final expense, but an index product is almost equal to what a term product costs at the same face amount. So
is that LSW that you're saying that?
Yeah, I would use LSW.
That the whole life IUL is going to be $20-some more than whole life.
Yeah, right. But how about between the cost of the term and index universal life? I think it's still about 10 or 20 bucks between those two also. Like for instance, if I was to take $100,000 and put it as term or an IUL, this IUL is probably going to cost $20 more. Than this. Most of the time. They come with the same underwriting, but this is a great way to sell products too, though, because there's nothing you can't offer them. It covers every basis of whatever they're trying to cover. And this is a way to get people to understand that at least they are covered for the next 20 years at a cheap rate. It's not the way you like to do it, but it's the way that can get you some money in your pocket. Let them worry about it in 20 years. Or that's a client that you can easily call the following year and see how they are, see how their health is, and just let them know, look, I think I want to take a look at your policy. I want to do a policy review with you, and I'd like you to take a look at this Index Universal Life product. The downside to an index product is the cost of insurance. So every policy that you sell, you need to make sure that somewhere down the line that you inform them about overfunding it. And when you get good at this, you'll be able to teach them about overfunding this product so that they have the product in place 30 years down the line and cost of insurance doesn't deflate it. So make sure that you fit somewhere in your Index Universal Life sales the acknowledgement of overfunding it, like teaching them how to use the interest rates to make more money. I wouldn't say cost of insurance is going to hurt them later. Don't ever mention that in a sale. But you can say that because of the interest involved, Mrs. Jones, you can actually build cash value better and use this as an investment portfolio by funding it with an extra $100 or $200 out here and there. Just get them to do a couple bucks a year. If you can get them to overfund it by $500 a year, that's $6,000 extra dollars, every 10 years. That should be okay to take care of the cost of insurance. And that should keep the product in place for the rest of its life. So that's what I figure is if $500 a year extra in these products, these index, that's $6,000 every 10 years. That should be good enough to keep it in place due to cost of insurance. However, we live in an era where we'll never know what the hell cost of insurance will be later. I don't know what inflation is going to do, so it's kind of nuts. So anyway, some of the terms that you can, when you're in a house selling, you're sitting down at that table and you're going over your board and you have them down as their Social Security. You got that information. Who makes the hire? The two. Social Security, so you can get some idea what money's coming in. You can ask about investment portfolios, and that's where the annuities pop out. The main thing is that you let them understand the product itself and that you're going to be there next year also to take a look at their needs also. Again, you want to become their family rep, not just their rep one time. So what is the need? That's the biggest question you have to answer, Jerome, and anybody else, is the need. What is the need? Why do they need it? What the hell do they need it for? And once you figure that out, you understand. Most of the time with final expense, you really have to find the need. Is it for burial? Is it for leaving money behind? Would you like to do both? So if I can put a program together that fits your needs, you're going to buy this product and will fill the need. That way you never have to do this again. I teach people how to never have to do this again. So they do it one time and that's it. It's over with. They do it one time and that's forever, unless I call them up next year and I have a different program for them. But find the need. And after you find the need, you sell the deal. Selling the deal is closing the deal out by getting the paperwork out and doing the questionnaires and making sure that you do the questions properly and know that once you get the aptical on the phone that they're going to ask the same damn questions. So make sure that you know the scripts and you know what product you're using so you can get this done right the first time. If somebody's graded or return a premium, don't get so jittered about it. It's still a product that they need. 9 times out of 10, the graded is 30% of the face amount the first year. The second year, 70%. And after the 24th month, it's 100% of the face amount. Ask them, do you believe, are you going to die in 2 years, Mr. Jones? That's the joke I make in the house. Do you believe that you're going to die in 2 years, Mr. Jones? No, I don't believe I'm going to die in 2 years. And with that being said, that helps put that product in place because he knows he's not going to pass away. So working with graded products, is something I do a lot, to be honest with you. I make a lot of money off of those damn things, a lot of cash. Sealing the deal up. Make sure you do some kind of cool down. Don't walk out of the house unless you understand that they understand what they just bought. So after you've done the deal, do a rewind of it and let them know what just happened. Or ask the question, do you know what just happened? Do you know what we just did here? Oh, if they can explain, yes, I bought a $20,000 whole life product, explain to them, fill in the details and say, yes, it comes with cash value. Remember, you can take loans. It earns 3% interest. Most final expense products earn about 3% annually on their cash value. And Jerome and everybody else, I'll be honest with you, I sell on cash value probably more than anything. Why? Because I'm showing them that their product is building value. It's not just going into the ether, their money. Their money, this bill, this investment, I call it investment, not a bill actually. This particular investment is the only thing that they're going to spend money on that they'll actually make money on. And someday that money's going to be there when they need it the most, or their family needs it the most. So here's another strategy that I use inside the house, and this is important. If you have a husband and wife, and the husband, let's say we're getting coverage on the husband, and the wife is the beneficiary. Well, if the wife dies first, the husband can cash in the product for the cash value. So remember that. That's important to teach people everything that they can do with these products. So if the product is on the husband and the wife dies first, the husband can cash the check in, cash the policy in for the cash value. So again, if you go to sell a product and you're selling it on a husband and his wife is the beneficiary of the policy, but let's say the wife dies before the husband dies and the policy's on him and it's 10 years down the line. Well, he can cash that policy in for the cash value. So remember to tell them that this almost acts like two products in one. Because if he dies, Mrs. Jones, you get the money. You get the face amount. But if you die before your husband, he can cash it in for the cash value. So that's another strategy that I use to teach them how to use the product properly. And it works like a charm, believe me. So sometimes they'll even say to me, so you mean it's like two policies in one? I'll be like, exactly. Yes, that's exactly it. So if you put a product on any individual at the house and the beneficiary dies, let's husband and wife, then the owner of the policy can just cash it in for the cash value. That's a great way to sell that shit because you're trying to build value in all ways, shape, or form. So show them as much value as you can and you'll seal the deals every time. That's why I put seal the deal right here. You can only beat the other rep that's out there coming to the house who's trying to knock you off the books by building huge value. The product themselves have value in them. So if you just learn the value of the products and invent some shit to talk about, be inventive. I invented everything. I'm going to be honest with you. I've never once trained on products. I learned the products as I went through this stuff. And I've never done webinars on products. I just understand that they come with 3% interest, final expense, and they have premiums that are paid that are investments for cash value building, that the cash value can be used for loans later on, that if the beneficiary, the wife dies before the husband can cash the product in and he can then pay for her funeral using the cash value in the product. So they don't necessarily need two products if they make it a few years down the road. So it's a great way to sell that stuff. Let me go over some things here that I got. This is a lot of in-home stuff, but like if somebody says I want to think, let me go down to another one. How about I have insurance already? If somebody says I have insurance, okay, great. Let me ask you, do you have the old or the new kind? That's a great question because nobody understands what the hell they have. So if you ask somebody, do you have the old or new, do you have the new or old kind? Prospect, what do you mean? The agent. Got a minute? Let me explain. And that's where you explain the difference between, you know, the stuff that's old and having them get their product out, which a lot of times you may find that people are inside already Index Universal Lives. So Jerome and everybody else listening, if you can figure out how to take products off the table and get people cash value, you're going to make a lot more money because you're going to use the premiums that they already have in place. So instead of getting more life insurance for people on top of what they already have, you're going to take off the table what they have and use that premium plus adding some premium to it to make larger sales. All you need to learn how to do is get the products on the table and show the people, especially Index Universal Lives. You need to call the carriers up and tell that individual, look, this is an Index Universal Life. It comes with cost of insurance, and you need to find out what the cost of insurance is today because this policy could die. You could lose this product. So when you're selling somebody on a product, find out what they have. If they have an Index Universal Life product, try to take it off the table and cash it in. Because 9 times out of 10, they're older products. The cost of insurance is too high, and the product's going to wipe itself out anyway eventually. So to do this strategy, though, you need to call that carrier up and get a pen and paper out, put it on speakerphone, and ask them, what's the premium payments? What's the cost of insurance? And what's the cash value? When you find out those 3 things, you're able to do some math. Hypothetically, if the cost of insurance is $60 a month, you also need to ask what the cost of insurance will be the following year. So what's the cost of insurance go up to? I'm sorry, I missed that. What does the cost of insurance go up to when you're talking to these carriers? When you figure these things out, like the premium, the cost of insurance, what's the cash value, and what does the cost of insurance go up to next year, you're going to figure out how to take policies off the table and cash them in for people. People love that shit because then you made them money. Plus, you get to use the existing premium that's in place. So it's a great way to sell products. Obviously, if somebody has a term product in place, what I would do with that is I would add up all the money that they're going to spend over the years, and then I would add percentages onto it. So hypothetically, if somebody has 10 years on a term product, I would add up, let's say it's $100 a month. I would add 100 times 12 months, that's $1,200 a year, times 10 years left on the product, that's $12,000. So $100 a month times 12 months that they pay it, that's $1,200, times 10 years left on the product, that's $12,000. I would then add the interest that they would lose inside a whole life. So that's 30% interest. Add that to the $12,000. See what that comes out to. And then tell them in 10 years, you're going to be looking for a new product and you made no cash value. So it might be a high face amount, but those are the only 2 weapons you really have against a term product that has a high payout. So you need to have your skills on right there and make sure that they understand, sure, you're going to lose some money for your family here, but at the end of the day, you're earning cash value on a product that you're losing money. So this is why the Index Universal Life is better than your term product. Because if they qualified for a term product, 9 times out of 10, you'll probably be able to get them into an index product. So keep that in mind when you're looking at term products that customers have. If they were able to get that product, 9 times out of 10, they're probably going to qualify for an index universal life.
Where does that 30% come from that you just mentioned?
30% was from if they had whole life. So if they had a whole life product, that's what they would have earned over the past 10 years is 30%, 3% a year for 10 years.
Oh, okay. Okay.
So I was just giving them an idea of the money that they would lose over the years. How about this one? I'm really not interested. That's okay, Mrs. Jones, but I'll try to be interesting. My company just asked me to go over this with you real quick, and you did send the card in, and you made the call, and I'll leave you some information. I appreciate your time, as I do get credit for going over this with you. Can I come in real quick? And should I come back tomorrow or Thursday when I'm be enrolling more folks in the area? These are more like door knocking lists. I have this list of things I can send you, Jerome. It says 12 common objections on final expense. So I can send this over to you. I'll put this here so I can remember to do that. But it's probably like more like when you get to the door type deal. To me, it can help you out, though. It's got some information that could be useful in here if you read it over a few times. Any little thing you can get out of that would be helpful for you. But let me see here. With the index universal lives, always make sure that we find the premium that works best for the client. How do you do that? Well, you go over their funds and really do the math with them. If you can do the math with them, I promise you the people you're doing the math problems with are the people that are going to stick on the books and they're going to pay higher premiums. So don't worry about selling everybody. You know what I mean? In the cases where you get the sell, just make sure you're selling high premiums. That's all you want to really focus on, is selling higher premiums. That way you see a hell of a lot less people, and you don't need to bury yourself in calls and driving around all damn week. But I can tell you, it still stands like this. If you want to make $20,000 a week, you're going to have to see 10 people a week. That's the numbers. Unless you sell higher premiums, you can see 5 people like I do a week and do 10,000. But to really see $20,000, you need 10 people to literally sit with. So that's been the average numbers I've noticed over the years. And then you know, you don't have to worry about money for the next month at least. You know, where was I? The sale with the index universal life versus the term is an easy one. When you're in the house, just show them the difference, cash value, not cash value. I want you to start learning how to take policies off the table. So I want you to go into your next couple homes and make sure that you ask what they already have in place so you can review the idea. Ask them, when you ask during your sales process, do you already have life insurance? Yes, I do. Is it the old kind or the new kind? If you ask that question and they're going to say, what do you mean? Well, there's products out there that were older. They were sold back in the day that are about 10 to 20, 30 years old. And those are the kind that come with cost of insurance. Those are the ones that the state of Florida is having me look out for. I am here to inform you that if you have that particular product, that you could lose that product. So it's very important. Do you have the product? Can we take a look? And the way I get these products off the table is I say it like that. I'm telling them to go get it. I'm very forceful about it. And they acknowledge that. Some people are just like, you don't think I get people that just say, you know what? I just want a quote. You're going through all this shit. I just want a quote. Listen, do you want the right quote or do you want the guess quote? I mean, I can guesstimate what it costs. But like you do your job, let me do mine. let me get through this and let me find out what is right for you or what premium I can come up with, which is the lowest premium possible. So if just make sure that you inform them. If they ever go like this, they say, look, I just want to, just tell me the price. That's exactly what I'm doing, Mr. Jones. I'm trying to figure out the lowest premium possible with the highest payout. So I can get you the lowest premium for the highest payout. Understand that. And how do I do that? Well, I go through a couple questions with you, and then I'm able to confront the numbers. All I have to do is jot them into my phone, and they punch me back the numbers really quick. And then we just go through a quick phone call, and I get you qualified. That's it. The qualification is a very simple process. You know, I think that with just the cash value, if you remember to just teach people about the cash value and really try to get them understanding what they already have, and if you're able to take that off the table, what they have, and use that premium to punch it into your new policy, you're going to make a lot of money. And that's how I sell. The largest policies I sell are by using the policies of other people's products, meaning I take all their products off the table and I get them their checks sent in a couple days, usually 2 weeks, 3 weeks. They get the check in the mail for their cash value. And I use that premium still to purchase the new product. Plus I understand that they wanted more anyway, so I'm just going to tack on more anyway. I'm going to add an extra $100, $200 to the damn thing and say, well, you wanted more. This is the need. Remember the word need? What is the need? What the hell are they trying to cover? And remember the word inflation. Do not lose that word inflation, because that, my friend, will help you get more premium out of people. Because what they're trying to cover today is not what the cost is going to be in 10 or 20 years from now. So you're going to fuck it all up if you use today's numbers on them. You need to use tomorrow's numbers. So get the higher premiums by getting tomorrow's numbers for them, not today's numbers, tomorrow's numbers. Make sure they are well aware of inflation. And if you don't know what inflation is, it's an average of about 4% a year. That's on everything and more than we know about. However, I just heard that the housing market went up by 6%. So, Jerome, your house is worth 6% more than you knew. I guess you could thank Trump. I don't know. So anyway, that's a good thing right now, to allow people to understand that the housing market went up so that they believe that their house is more valuable than they understood. And that'll help you sell more products too, because they've actually got equity in their house. You do not use the word cash value, by the way. You use the word equity when you're talking about cash value. If you got anything out of today, make sure that you use the word equity and not cash value. This policy builds equity. Look at the equity building in this policy. Look at the equity you walk away with in 10 years, Mrs. Jones, from this policy. This is your money. This is actually your money. Look, you've been paying for life insurance. You need it. You got to use your health and age today. You're healthier than you've ever been, or you may never get healthier than this. Whatever the case is, you qualify for it today. So we need to qualify you for today. I'm going to go over that process right now with you. I'm going to read you a couple questions. Just tell me yes or no. And that's it, man. So if you got anything out of today, make sure that you're using the word equity and not cash value. And another thing I want you all doing is I want you all finding the policies of the people that you see, the prospects. Find the products that they already have. Ask the question, do you have life insurance in your sales pitch? What do you already have in place? Do you have the old stuff or you have the new stuff? What's that mean? Well, the old stuff comes with cost of insurance. That's the nasty stuff. That stuff's beating people up. People are losing their policies left and right. Do you have your policy here? In one word, like in one sentence, I'm explaining it, plus I'm asking for it. So that's the stuff that people don't really need. That's the product that's making people lose their policies, Mrs. Jones. So do you have your policy handy? Can you go get it for me? So in one fell swoop, I'm getting them to go get their product out. Now, when they go get their product out, I want you to open up to the cash value page. Or at the beginning of the product, I want you to find out if it's just whole life, term, or index universal life, or flexible universal life. Flexible or universal are the same damn thing. So make sure that you find out what the product is. As soon as you find out it's an index universal life or a flexible, you know it's got cost of insurance. So with that being said, ask them, how old is this? Or find out in the product how old the policy is. If the policy's 10 years old or more, there's cost of insurance to it, and you're able to call the company up for them and get them to explain the meaning of cost of insurance and how it can deplete the policy. Very important for you to make more money, because imagine this. Imagine you take somebody's paying $150 a month for a policy. You take it off the table. You now need to replace it. Okay? So now you know that you have $150 in premium, but you were there to get them more. So cover the need. What's the real need? So get them $50,000, $100,000, $200,000 products. Don't be afraid to ask. The worst thing they can say to no to high numbers, but they can always say yes to lower numbers. You'll never know if they're going to say yes to high numbers unless you ask. So don't be afraid to ask for larger numbers. When you end the sale, or let's go back to when you're on the phone with the carrier, by the way, you want to do a policy review. Hello, I'm doing a policy review on Mr. Jones, whatever the hell his name is. Okay, what's your name, sir? My name's Jason Ferraro, F-E-R-R-A-R-O. Spell your last name out immediately, because they're going to ask you to do it anyway. Jason Ferraro, F-E-R-R-A-R-O. After that, you get them to tell you what the premium is monthly, the cost of insurance, the future cost of insurance. How much does it go up? If you can't tell how much it goes up because they just can't tell you, make sure that you find out how much it went up from last year. So how much did it go up from last year? The cost of insurance, I mean. Once you figure out the cost of insurance, you're able to subtract that by the cash value. So if let's say there's $3,000 in cash value. The cost of insurance is $100 a month. That's $1,200 a year coming out of that cash value. That policy has about 3 years to live. So you can always tell, and that's how you take policies off the table, by showing the person that the cash value depletes because of the cost of insurance. The cost of insurance is eating away at the cash value. And once you're able to do that, and you can sell larger policies, okay? What time is it? Let me see something here. 6:46. Okay, I'll tell you what. I think I touched on everything I wanted to touch on. I really wanted to go over that index stuff and a little bit over the phone script. But make sure that you ask the person what the product, what do they already have in place, and make sure that you want to get them to understand what they have in place. And then make sure that you fill the need. Find the need and fill it, but take policies off the table. Get them policies off the table, get them their cash value back, and replace it with a new product, okay? And if anybody ever asks you, you're replacing an index universal life with an index universal life. Most of the time, they won't know what the hell you're doing anyway. But teach them about overfunding it. Okay? So it's like, they don't know what you're doing. So if they do, you just say that the cost of insurance on this product, this new one, won't make it. You'll make it till death. Okay? So you can show them that you can make the product go to age 100 or 90 or whatever. So, all right, that's it for today. That's all I got for today, and I will see you guys on, what is today? Tuesday. Days are so screwed up. Is today Tuesday or Monday? I think today's Tuesday, is it? All right, so we're going to be doing another one of these on Thursday evening and then Saturday morning. So I'm going to do some more training and getting more people on this. And then I will talk to you all on Thursday evening, okay? Have a good evening.